Ideally, if you don't own any real estate and you're looking to get into real estate, in my opinion, a third of people's wealth should be in real estate. If you look at the billionaires in the world, about 60 to 70% of their wealth is held in real estate. So what does that tell you? If you want to be a billionaire, buy more real estate. All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and our topic today is how to invest $50,000. So I have people come to me all the time. They say, Aaron, I've worked hard to put $50,000 away to invest this capital. I have a couple options. I have a few places I want to put it. I have lots of different ideas. What should I do with this $50,000? And that's what we're going to talk about today on the Passive Cash Flow Podcast. So first of all, whenever you're looking to invest your capital, you want to have a strategy. What is your strategy and what is your stomach for risk? What type of investor are you? Are you a bold investor? This is a more aggressive investor. You're going to take larger risks. Bold investors tend to be a little younger. I'm 35 myself. I'm a bold investor. I look for higher risk investments such as cryptocurrency, equity investments, equity in real estate, higher growth investment opportunities. And that is where I prefer to invest. There's also moderate investors. Moderate investors are going to have more of a balance between higher risk investments and lower risk investments. However, you sacrifice gains with less risk. So moderate investors are going to be somewhere in the middle between bold and cautious investors. So cautious investors would be the bottom rung there, the ultimate low risk tolerance here, looking more for bonds, lower risk investments. So these tend to be older investors or people more towards the retirement age. So you want to understand, what is this $50,000 to you? Have you worked 25 years to save up this $50,000, right? You might want to be a bit of a cautious investor with a tip of bold because you want to grow it as well. Or you have millions of dollars in assets and this $50,000 is kind of your play money. So you might want to be a little bold with it and you might want to try to grow something quickly with that investment. So also another big factor here is, are you active or passive? Are you going to be hands-on? Maybe flip a house, buy a fixer-upper, hire a contractor to renovate it, work with a realtor to find a fixer-upper, go through the process of maybe getting a bank loan, a hard money loan, managing a construction site, managing contractors, hiring a realtor to sell the property, dealing with buyers, dealing with sellers, dealing with transactions and contractors, being on the hook for the mortgage, personally guaranteeing debt, right? That's an active investor. That's someone who's an active real estate investor. Or maybe you're actively picking stocks or actively picking mutual funds to invest in. You're actively investing your capital through different cryptocurrencies day in and day out. Maybe you have an active strategy and the time, the experience, and the know-how to successfully be an active investor. However, we're going to take a pause here because if you don't know what you're doing in that asset class and this is your first run, don't take your $50,000 and just here we're going to learn, unless this $50,000 is allocated to play money you can lose. If you lost it tomorrow, it would not affect your financial position. Hopefully that's this $50,000 we're talking about. If it is, and you want to learn how to flip a house or you want to learn how to be a day trader, then go ahead and use it for that. But that's a very high risk investment and really not a great long-term strategy. Okay, if you're going to invest in real estate, you want to invest with professionals, experienced operators who know what they're doing. Same thing with stocks, really. You want to invest with people that know what they're doing in that space. But here's another way to invest $50,000 and make cash flow. You can buy a short-term rental property or a vacation property. Now, as long as you're not self-directing your IRA or solo 401k, you can enjoy this property with your family and go on vacation, maybe a beach house or a ski house. I have a ski house I love going skiing at. We also rent it as an Airbnb property and make cash flow on it when we're not there. So it could be a great combination. But again, this is an active position. My wife does the management. I own a bunch of real estate. I have the infrastructure, the back office, the bookkeeper, to own real estate easily and manage it really hands off. So since I have these resources in place, it makes it much easier for me to own and operate real estate. But make no mistake about it, owning a vacation property and leasing it on Airbnb is a full-time gig. It is a hands-on gig. If you are doing multiple properties, it is a full-time gig. If you're only doing one, it's really not. But if you're doing multiple properties, it becomes very hands-on. And so a vacation property can, although you buy it to relieve stress, can end up creating stress if you think it's going to be easy to lease on Airbnb and not have to deal with the headaches of pleasing tenants who are on vacation for a short period of time and pay a lot of money to rent your property. You better bet everything's got to work. And if the pipe leaks, you got to get a plumber out there like that day. So it can be very difficult to manage short-term rental properties and vacation properties, but it can also be a good place to invest your capital because you'll earn cash flow ideally, equity growth over time, and tax depreciation, as all real estate offers. Then, of course, you have turnkey properties. So if you're looking to invest $50,000 in real estate, turnkey properties is not a bad way to go. You can hire a realtor, find an occupied 3-unit property in maybe a city near you, and hire a management company and manage it. And you can buy turnkey properties and own them, and they generally produce cash flow pretty quickly. And there's a lot less work to be involved. You're not renovating them, you're not leasing them up. But keep in mind, owning real estate, whether it's turnkey or a fixer-upper or a vacation property, is management intensive. It is not an easy asset class management-wise. Real estate, you need to know what you're doing. It's really not like a mutual fund or a bond or a stock necessarily. You're running the company essentially, or you're hiring a management company to manage that asset. So buying turnkey properties is easy. Managing a 3-family or a 2-family property, it's not rocket science. I'm sure you could figure it out. Even flipping a house, listen, it's not rocket science, especially if you know construction. But at the end of the day, these are management intensive options, and you'd want to be an active minded investor to invest in these recent options I've put out here. So you want to be aware of if you realistically have the stomach to be a landlord, have the time to be a landlord, and do you even want to be a landlord? It's not a very, grateful job. It's a thankless job, really, and it doesn't pay all that well if you don't have a bunch of property. So if you're not looking to be a landlord or run around and fix toilets and answer tenant calls, then you might want to be a passive investor looking at real estate crowdfunding sites or real estate syndications. People's Capital Group is a real estate syndicate. So what we do is we pool capital together, and our investors are completely passive. That means they don't have to manage the asset day to day. They don't have to secure the financing. They don't have to look at tons of bad opportunities to find a well-vetted, good investment opportunity. And of course, once we close on the property, they don't have to manage the construction or renegotiate leases with tenants or improve the property so it earns top dollar and can refinance or can be sold for top dollar. That's all the operator's job. So when you're investing in a crowdfunding site or a syndication, you're hiring professional operators to run the asset for you. And that's really a smart way to invest. Right? We don't go, do our own surgery on ourselves. We don't cut our own hair, and I mean, a lot of things these days we outsource to professionals. So real estate investing, real estate operations should be the same thing. Your hard-earned capital should not just be thrown to the wind, investing in assets that are now professionally managed by good real estate operators. Another way to invest passively in real estate without doing the day-to-day operations is a real estate investment trust. Now, a real estate investment trust are generally publicly traded, and you can get into these investment opportunities for as little as a few $100s. You could buy mutual funds that own real estate investment trusts. You can also buy privately traded real estate investment trusts that have different benefits. However, this is generally a stock that's backed by real estate. So when the pandemic hit 18 months ago, the stock market just dropped out, if you recall, right? And REITs got hit by about 80%. So if you owned a REIT that held a lot of office space, there was a complete panic on those REITs. Now, the truth is the value of office space in America didn't drop by 80% in 4 days, right? That's not how real estate values work. But that is how the stock market works sometimes. And when it drops fast. Now, REITs have done well. They produce strong dividends. They can grow over time as well. And generally, people invest in REITs for the cash flow. They produce about 8 to 10, sometimes 12% dividends. So you want to look for strong cash flowing REITs there, but also be aware that it's not like owning real estate. It's more volatile and it goes up and down with the stock market. However, it is more liquid, so you can get in and out of the investment much more quickly than a real estate syndicate, where a real estate syndicate, you may be locked into the investment for a 3 to 5 year period. So there's benefits to both being able to move out of the investment quickly, but also that leads to volatility. So real estate syndicates tend to be a better passive investment for people looking to avoid volatility that aren't looking to stomach the woes of the stock market. And that brings me to real estate partnerships. So real estate syndicates, crowdfunding sites. These are operators similar to People's Capital Group, where we can operate the asset and allow passive investors to get invested in the opportunity. There's other types of real estate crowd sites and real estate syndications. There's real estate partnerships where you're joint venturing with someone. Maybe they're doing the work, you're bringing the capital. So there's lots of ways to skin the cat, as they say, with real estate investing. There's active ways, there's passive ways. You want to make sure you find the right fit for you and be realistic. Do you really want to be a landlord? Do you have the means to do that, the time to do that? Is that the best option, doing it yourself, or investing with professionals? Is that a better option? Sure, you may have to share the pie a little bit more, but at the end of the day, you may actually earn a better return investing in a real estate syndicate with professionals operating the project and operating the properties than you yourself operating it and having that learning curve all along the way. So other investment options, if you're looking to invest $50,000, we have mutual funds and ETFs. Mutual funds can hold a number of stocks, a number of REITs, so ETFs as well, a great way to diversify over the stock market and not have to be at the mercy of picking the next winner or loser, or, and knowing which stocks to pick. You could just invest in mutual funds that are professionally selected stocks there, and they tend to ride the S&P 500 or something like that. And again, you're looking at the volatility of the stock market, but overall, the stock market does grow over time. You also want to check out robo-advisor services. These days, there's so many services out there. There's technologies that cost a few bucks that can help advise you on day trading. There's different investment platforms that are free that you can start investing on yourself. And of course, you want to make sure you know what you're doing here, but it's good to be diversified with some capital in the stock market, some monies in mutual funds, maybe specific stocks or companies you really follow or really enjoy. I myself enjoy motocross and certain motocross companies, so I might want to buy stock in that just to kind of support that. I like owning stocks in that case, and companies you kind of enjoy their product there. But really, at the end of the day, you want to be diversified, and you don't want to necessarily be doing all your stock picks if you don't know how to do stock picks, because that can result in losses and way too much risk. A final way to invest $50,000 is to start an emergency fund. Now, if you don't have an emergency fund, it's extremely important you have a cash savings of 6 months, so that if something happens, if you lost your job, lost your forms of income, you were able to survive on your savings for at least 6 months. So you want to have that cash available. Maybe you want to invest into your retirement as well, 401k plan, IRA. You can self-direct your IRA into real estate. You can self-direct your IRA into lots of different asset classes. You can have a solo 401k that you self-direct into real estate as well. That's a great way to have your nest egg, grow your nest egg. Maybe it's in the stock market, maybe it's in real estate, maybe it's in both. And you want to diversify that asset class, diversify your nest egg, and make sure you have an IRA there, a 401k over time, and you're deferring those any tax gains, any tax ramifications there as well. Great tax advantages to an IRA. So finally, we have bonds, and investing in bonds is a more conservative way to invest. You're not going to make a great return there, but it's a great way to beat inflation, or at least keep up with it at the rate inflation's moving now. And of course, that's more for conservative investors, perhaps at an older age, are going to enjoy bond options. The bottom line is you want to have a combination of conservative investments, aggressive investments, higher risk for higher reward, but lower risk for lower reward. You want to be diversified. So depending on your position, your other investments, that's going to drive how you're going to invest $50,000 if you have to invest today. Ideally, if you don't own any real estate and you're looking to get into real estate, in my opinion, a third of people's wealth should be in real estate. If you look at the billionaires in the world, about 60 to 70% of their wealth is held in real estate. So what does that tell you? If you want to be a billionaire, buy more real estate. Go to peoplescapitalgroup.com, fill out a qualification form. We'll see if we're a fit. You can learn more about passively investing in high demand apartment buildings with People's Capital Group. And that all starts at peoplescapitalgroup.com. So I hope you enjoyed our presentation today about how to invest $50,000, and you go to our website to learn more. Have a great day.